Thanks for joining us on Power Lunch. This is Bloomberg Quinn. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this afternoon. Markets head higher on the first trading day of FY19. Pharma automakers lead the gains. Broader markets outperform.
Binani Cements Committee of Creditors reject Ultratech's offer, informs the Kolkata NCLT that the proposal is incomplete.
Shares of ICICI Bank fall the most in 7 months as questions remain unanswered on Chanda Kocher's role in extending loans to Videocon.
Car makers post healthy sales numbers, with all of them posting double-digit growth in March.
All right, all those stories coming up here on Power Lunch. But first, let's take a look at the markets. Yatin Mota is joining us with the market check. Yatin.
Well, if you look at the markets in a healthy position, as far as the FI, the new FI is concerned, Nifty advanced decline ratio is at close to 35:15. So we have almost, 3 stocks gaining for 1 declining. So the advanced decline ratio on a healthy side. But pharmaceuticals is one space which has seen some good recovery after the kind of carnage that we saw, last financial year. Cipla, Lupin gaining over 5% each, top gainers on the Nifty. Kotak Bank, Adani Ports and Tata Motors, after posting a very healthy set of March sales, is also the few performers on the market side. But ICICI Bank, that stock is quite nervous, post the entire video controversies. That stock is down as much as 6.5%. Also, if you look at IOC, Axis Bank, these are the other 2 Nifty heavyweights which are down in trade. But on the mid-cap side of the market, we have seen some good healthy trends. Escorts, India Cements, SREI Infra, all of these stocks are active on high volumes. And Jamna Automotives, that is also one auto ancillary which is gaining over 6% on the back of good sales that we are looking at from commercial vehicle space. So all the auto ancillaries along with auto stocks are gaining in trade after a healthy set of March numbers reported so far.
Yes, and thank you for that. Let's move on now. Axis Bank touched a 5-month low before paring down some of those losses after the Economic Times put out an article saying that the Reserve Bank of India has asked the bank's management to reconsider the 4th 3-year term for its MD and CEO Shikhar Sharma. The regulator is said to have written to the bank's chairman, Sanjeev Mishra, laying down reasons why it feels that the decision needs to be reviewed. One of the reasons, according to the report, is the bank's performance and deteriorating asset quality.
On to ICICI Bank. Recent news surrounding its CEO and MD Chanda Kocher and involvement in loans extended to Videocon have got markets and market participants at least taking note. The stock, as we said earlier, is down more than 6%. Brokerage houses are taking a cautious view, though, saying that while some questions remain unanswered, the broader outlook for the bank perhaps remains unchanged, at least for now. Shraddha Babla is joining us with details of what some of these brokerage houses are saying. Bernstein seems to be the one which has raised the strongest red flag, but they've been cautious on the bank even before this, Shraddha.
That's right, Ira. So what Bernstein is saying is that the probe worries have now only escalated with the CBI involvement, and hence they're advising caution as far as ICICI Bank is concerned. And they've said that they believe the stock price will continue to remain way down on account of these developments. They've also said that ICICI Bank deserves a lower valuation multiple relative to quality private sector banks like HDFC Bank and Kotak Mahindra Bank. And ICICI Bank already trades at a significantly lower multiple than what these banks are trading at. So they maintained an underperform rating with a target price of 220, probably one of the lowest that is there on ICICI Bank. On what some of the other brokerages are saying, starting off with Macquarie, they've said that they will be watchful of the developments of the Videocon case. But having said that, ICICI Bank now trades at about just 1 time its FY20 estimated price to book value ratio. They're also saying that the bank is unlikely to require fresh capital despite haircuts and IFRS implementation because of its impressive ability to monetize subsidiaries at good valuations. So they see a low dilution risk, and hence they have maintained an outperform with a target price of 425. IDFC Securities also says the similar thing, that the bank's business trades below book value on an FY20 estimated basis. So they have maintained an outperform with a target price of 390. Though they do see pressure on the stock in the near term. Goldman Sachs has said that they believe the latest step by the management will go some way in reassuring investors about lending practices, and they're referring to the bank having addressed some of these concerns in a press release to the stock exchanges, and they have maintained a buy rating with a target price of 410. So clearly, while brokerages do see a depressed stock price performance in the near term and remain watchful of further developments, given the not so pricey valuations, they have refrained from revising their target price or ratings.
All right, Shraddha, thanks for that. We did have a chance to speak with the gentleman who actually first brought out all of these issues, Arvind Gupta, who belongs to an investor protection group who in 2016 had put out a blog raising concerns about the nature of transactions between the Videocon group and New Power, which is Chanda Kochar's husband's company, Deepak Kochar, who's the founder of New Power. Well, we spoke to the whistleblower trying to understand what his concerns are. Some of the concerns he raised are very similar to what has been put out in the Indian Express article, which then has led to this spiral. But listen in to what he had to say.
If one shareholder is transferring his shareholding in favor of somebody else, that's one part. And if every player of that particular group is transferring its shareholding in favor of somebody else, so it's both. Entirely, you can see in a broadly, or you can say in a micro level also. But the fact is that the complete ownership is transferred. The moment you get a majority shareholder of a company, you can call the shot. So from being 50-50, ultimately now it's almost 99% shareholding, which is now with Mr. Deepak Kochar, number one. Incidentally, also there was another company that I was referring you to, the Supreme Energy, which has not been spoken much by people because that's a different entity altogether, which was completely owned by Mr. Dhoot, 99.9%. They advanced certain loans to this company, about 64 crore and so, by subscribing to the convertible debentures, which I do not know it came back also or not. But that was possibly, I suppose, Videocon Group's money, shareholders' money. How you transfer the majority ownership, you can transfer always by issuing some convertible instruments at a very low premium or at a par or even at a discount, and then you find that ownership has been transferred even of that company completely to Mr. Deepak Kochar and company. Now the question is that the transaction between ICICI Bank and the Videocon in lending them the money, in advancing them loans at a time when the company and the entire group is facing crisis. They were defaulting in payment of interest and servicing of the loan, which has observation been made already by the auditors in the annual reports. Maybe it was completely for the entire industry, but specifically those houses which have been marked as a house of debts. There was a very interesting report by Credit Suisse, I remember, wherein the top 10 borrowers of the country, they were all flagged there. So anybody dealing with them, therefore, should have done it with a great deal of caution.
No, that's true.
Yet, as you would have said, now the controversy is that you would have now seen that ICICI Bank lent to Videocon Group in 2 tranches by 5 companies, total of 3,250 crore to the Videocon Group in the country. At the simultaneously same time, the ICICI Group has lent this Videocon Group overseas also. That has been reported already in media, I suppose. To some company known as Tusker, this thing overseas, which is based in Cayman, and the money was given to them in Canada and UK. So about 660 crore. So I would say to the published information available, the total amount of exposure by the ICI in this group was 3,910 crore.
Right.
And you would see there was a mysterious development with respect to the New Power. That after the initial transactions were done, Mr. Videocon Dhoot withdrew himself from the name lending in the company. There was always an alter ego in the company representing, and I still suspect that whatever one may say, they still have the alter ego on the company. May not be directly in the country, but surely maybe overseas via Mauritius route. because now if we see the shareholding of this new power which exists now, is that the DH Renewable company, which is from Mauritius, has become a majority shareholder. They own about 55%.
Right.
So it would obviously raise the eyebrows, and they have subscribed to the capital of the new power at a very hefty premium. They paid to acquire one share, they paid 1,215 rupees premium.
True.
So the question is, this investor who has come in the Indian company to invest must have seen something very great. So the question now I would raise, I want to know the identity of this investor from Mauritius, because there's no way I can find out, because there is no published way by which anybody can find out. So it is only for the investigation agency and the government possibly, and therefore the appeal.
Right.
I want to now know, when we talk about the dirty money being laundered back to the country or whatever, I would say it's a dirty banking.
Well, that's the whistleblower Arvind Gupta there. Let's move on now. While multiple agencies investigated the 13,000 crore fraud at Punjab National Bank, Santana Krishnan, Managing Director at PKF, says that the public sector lender has no option but to account for the entire hit in the fourth quarter.
The moment of the loss is determined and you know the loss, you provide for it. You don't wait for the next quarter to come, because when you know that a fraudulent action has taken place, you take the whole of the losses and account for it in the same quarter. I don't think any accounting principles are there which will allow you to defer this to the next quarter. In my opinion, PNB will have to provide, will have to look at all those LOUs, see what are bad, and they will have to provide it today itself. Conservatism in loss making and provision for loss making.
I'll get to the RBI circular, which does seem to permit 4 quarters in a minute, sir, but very specifically, so if you look at the PNB balance sheet, it gets deducted from the reserves and surplus first, because the RBI circular seems to say that you have to account for it in a manner that you adjust the reserves against this. This was a contingent liability after all, sir.
It was a contingent liability as far as the transaction is not fraudulent. If it is fraudulent, it is no longer a contingent liability, it is a crystallized liability. There is a distinction between a contingent liability and a liability which is arisen. When you had an LOU, it was a contingent liability. When you find an LOU is fraudulent, it is no longer a contingent liability. Second, the regulatory forbearing or regulatory override does not override accounting. The regulator may say, in order not to create panic in the market, you provide over 4 quarters. But in a fraud transaction, it is never done in a 4 quarter. Even the RBI circular should be looked at from a fraud angle and not from a circular which is generally applicable. For example, you provide for the gratuity, which is 20 lakhs now, you provide additional gratuity liability during the current year, you may provide it over 4 quarters because it's applicable throughout the year. But a loss which you have made is not applicable over the whole year. It has to be provided for in the quarter in which you determine and cannot be deferred, even according to this RBI circular. And removing it from the reserve and not routing it through P&L account is more a regulatory override and not an accounting override. Regulators have a right to determine how to account it, but accountants need not necessarily agree with the regulator's view.
The banking system as a whole is preparing for a tough quarter. When the fourth quarter earnings come out, banks will have to take note of the Reserve Bank of India's new stressed asset framework, which means that NPAs will climb higher. In fact, even the March quarter may not be the peak if you go by an understanding of the kind of assets that have been marked down as NPAs and the overall stressed asset pool. Shraddha Babla standing by, preparing us for what promises to be a tough quarter, Shraddha.
Well, yes, Q4, the NPA pain for lenders in all likelihood is expected to continue even as they continue to report organic growth in NPAs and provisions as they clean up their books, and then also adjust to RBI's new stressed asset framework, which was released in February. So just how bad can this NPA picture look like in the fourth quarter? Well, as of 31st December 2017, the gross NPAs of listed banks stood at 8.85 lakh crores according to Bloomberg Quint calculations, and which according to early estimates of rating agencies like ICRA and CRISIL could rise to 9.25 to 9.5 lakhs as of the fourth quarter FY18 or the March ended quarter. And then you will also have accounts like the case of Reliance Communications, which could add to that NPA pool. So overall, the rise in NPAs and provisions, of course, will have a huge impact as far as the corporate lenders' earnings is concerned. And if you look at Jefferies, they have estimated that banks like SBI, PNB, ICICI Bank, Axis Bank and Bank of Baroda will report a loss before tax of anywhere between 2,800 crores to as much as 15,000 crores in case of SBI. What are some of these estimates based, or these scary numbers based on? Four set of assumptions that the analyst has shared. One, that of course the operating profit will remain the same as was in Q3. 80% of the stress assets will slip into NPLs. Generic slippage ratio they've assumed will remain at about 1%. The provision coverage ratio they've estimated that on the new NPAs would be about 50%. So this is what the estimate is. But even despite these scary numbers, the March quarter may not really be when the NPAs peak out, and that is what is more worrisome. Now, the total gross NPAs of the banking system are at about 10%, and the stressed loans are at about 16% of the total outstanding loans. That is according to Credit Suisse estimates. What they have also said that there is another 2.6 lakh crore which sits under various RBI dispensation schemes, and then you have another 1.4 lakh crores which fall under the watch list, and Credit Suisse is expecting this 2.6 and 1.4, that is about 4 lakh crores to slip into NPAs, of which 1 to 1.5 lakh crore they expect will be referred to insolvency within the next 6 months itself. What is even more worrisome is that some of the Mudra or SME loans are not a part of this watch list. And remember, recently bankers like Uday Kotak have said that the next set of NPAs could actually come from this sector, and hence Q4 may not really see peaking out of these bad loans.
All right, Shraddha, thanks so much for that. Just going back to our story or the report in the Economic Times on Axis Bank, Harsha, statement just coming out from the bank, actually saying exactly what they had said in response to the Economic Times story, which is that we wish to inform you that the bank's board follows a standard process with regard to senior appointment and forward its recommendations to the regulator. This process is currently in progress. So I guess they're confirming that the appointment has not been confirmed by the Reserve Bank of India yet. They seem to be suggesting that there is some back and forth. The nature of that back and forth is unknown. I just want to say that it has been many months since that appointment was made. So it's not, like sort of a month ago and you would give the regulator time for a month or 2 months. This query has obviously gone from the regulator, whatever it is, after a long period of time. So it's almost more than 6 months now since that appointment was first confirmed by the board.
And the context of the Reserve Bank of India asking for the board to reconsider Shikha Sharma's term. Let's see how the story unfolds. But let's talk about the other one as well. Binani Cement. Binani Cement's lenders have rejected Ultratech and Binani Industries' proposal. The creditors have informed the Kolkata NCLT, the National Company Law Tribunal, that the proposal is incomplete. Pradeepta Mukherjee of Bloomberg News joins us on the phone line with more details on this one. Pradeepta, what happened at NCLT today?
The NCLT, the court was adjourned today, and the next hearing is on 9th of April, next Monday. So the committee of creditors, the creditors panel for Binani, they said that they were asked to consider an out-of-court settlement option. The judge had said if the creditors could consider, or if at all consider, an out-of-court settlement. So the creditors would have to meet and come back to the court and tell their opinion on whether it will be considered at all or not. So the COC, the lawyer for COC today said at the court that they could not consider it because of two reasons. One is the court was closed because of holidays, and so they could not obtain an order for considering the offer. And second, they also said that the Binani's plan as to which creditor would get how much, a detailed plan of what kind of repayment would happen was also not available with them, which is why they have sought more time, which is 9th of April, and NCLT, the judge today observed that no further time beyond 9th of April would be given to the committee of creditors. So they have to come back with their opinion on 9th.
All right, Radhika, thanks so much for that update. That's Binani Cements. SR Steel is the other case we're tracking very closely. And here it looks like the Committee of Creditors has put in some new conditions into the potential new bidding round. Vishwanath Nair is here with us to tell us what those conditions are and whether it makes it tougher for the erstwhile promoters to bid once again.
Yeah, so essentially the new conditions that the Committee of Creditors have put in essentially bars any entry, any future entry also of the erstwhile promoters into the case. What our sources are telling us is that this was introduced into the fresh bidding document that has been put out by the lenders for the 6 people who had originally submitted the expression of interest. According to this, they cannot, they have to declare that they will not enter into any kind of arrangement with the erstwhile promoters or anybody who does not fit under Section 29A specifications. That is to say that anybody who is a promoter of an NPA company. So, in essence, this arrangement with the Ruiyas, which New Metal earlier had, wherein Revant Ruiya was the shareholder, was part of the trust, but that cannot continue. So this was already blocked under 29A, so the law was pretty clear in terms of that. But then now the RP and the Committee of Creditors, they're making sure that that sort of stays and that there's no later entry of Ruiyas in the business later.
But I assume this would be a condition that they intend to impose across the board. They can't sort of come up with conditions for specific cases.
It's not specific case specific, because considering it's prompted by the lender. So State Bank of India being the largest lender in most of the cases, this is something that will be there across cases. Because this was a fear, maybe 2 years later, 3 years later, the successful bidder just sells it to somebody else. According to this, if such an arrangement is if the lenders come to know of such an arrangement, they will unequivocally pull the resolution plan off, and then the case will go on as whatever this stands. But it's also important to notice that in this case, 29th April is the last date. So, considering all of these, the lenders are a little more concerned about people coming in and going out, so they don't want any debate on that. There's only about 20 days odd left in the matter. They need to wrap up the resolution plan quickly, otherwise the 270-day deadline ends and the case goes into liquidation, according to the IBC. Of course, all of that depends on legal discussions later.
Vishwanath, thank you so much for that. That's SR for you. Let's move on now. Automakers have nothing to complain in the month of March. All of them posting healthy sales growth. Last month, Yatin is standing by with the breakup of those numbers. No concerns at all, Yatin?
If you look at the auto sales number for the month of March, more or less in line with the street expectations. In fact, we have the commercial vehicle players and the passenger vehicle players reporting strong double-digit growth. Now, if you look at Maruti, they reported the numbers first, sales coming in for the month of March, little over 1.6 lakh units, in line with expectations. But look at this, the breakup. The UV segment showed a growth of 24%. The hatchback segment showing a growth of nearly 21%. Also, if you look at other players like Ashok Leyland, Mahindra and Mahindra, a good number coming in. Tata Motors also, the medium and heavy commercial vehicle segment seeing a growth of nearly 21%. The overall passenger vehicle segment saw good growth on the back of good order book, and the new launches have done really well as far as the passenger vehicle segment for Tata Motors is concerned. If you look at other players like Ashok Leyland, M&M automotive segment, the domestic sales were up 10%. The domestic tractor sales also surprisingly came in above expectations, little over 27,000 units, a growth of nearly 50% on a year-on-year basis as far as the domestic markets are concerned. Ashok Leyland total sales were up 20%. The light and heavy commercial vehicle, both of these segments have done exceedingly well as far as Ashok Leyland is concerned. And coming to the two-wheeler players, Bajaj Auto and Eicher Motors, we have the Royal Enfield sales, growing by nearly 26% as far as the domestic market is concerned. Bajaj Auto also, their domestic, motorcycle sales were up 5%. But if you look at the total sales for Bajaj Auto, that showed a growth of nearly 32% on the back of good exports.
What about the other guys who are yet to come out with their numbers, Yatin?
Well, two players remaining. One is Hero MotoCorp as well as TVS Motors. And if you were to look at the estimates, we are expecting a 10% kind of a growth for Hero MotoCorp. Of course, that will be on the back of higher base and recovery of the rural markets. And also, if you look at TVS Motors, there also we are expecting a very strong growth on the back of the new scooter launches that they have done. So, Nork is one scooter and the new launch, because of which the higher growth in the scooter segment is expected for TVS Motors.
All right, thanks for that, Yatin. Let's slip into a quick break. We'll come back on the other side. The H-1B visa norms have just gotten tougher with new rules coming into play from today. We will speak to Shivinder Singh from the industry to understand the impact.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back on lunch, this is Bloomberg Quint, the headlines at this hour. Markets trading at day's high. Nifty manages to stay above 10,100. Broader markets outperform.
Biocon is going to focus on biosimilars, says the drug maker's chairperson and managing director Kiran Majumdar-Shaw in an interview to Bloomberg Quint.
The new H-1B visa norms come into effect today with greater scrutiny by the Trump administration.
All right, before we get to those stories, let's dip back into the markets. 0.5% higher on the Sensex. Darshan Mehta is joining us with the movers. Darshan.
Yeah, so I think the talking point right now will be the Nifty Bank. Just look at the recovery that's happened. It's managed to slip into almost into the green, and there seems to be a lot of traction. So this clearly is the big move that's happening today. Nifty anyway is trading at day's high. Pharma is doing extremely well. So pharma and auto are the two spaces which have done extremely well. Some of the frontline counters in the pharma, be it a Cipla, be it an Aurobindo, or be it a Lupin, all of them are trading higher by 5 to 6%. There are no news that has come in, but nevertheless, pharma as a pack is doing extremely well in trade. The second basket which is doing well is the auto space. Monthly sales numbers have come in much stronger than what it was. So Maruti is doing well. You have your Ashok Leyland. Escorts is up almost 7% on the back of strong sales numbers. Only sore point today is the Nifty PSU Banking Index. Again, is seeing a lot of traction. A lot will depend on ICICI Bank also, because ICICI ICICI Bank has a large weightage on the Nifty Bank, and that has come off the day's low. So there could be a little bit of traction that's been seen. Just Dial and Tata Global are the other two counters which have managed to inch up. Surprisingly, all the three Nifty companies which were excluded, so be it an Aurobindo Pharma, Bosch or Ambuja, all of them are doing well. In fact, Aurobindo and Bosch are up almost 5% in trade, and money seems to be flowing back into some of the other private banks. So while ICICI and Axis are bleeding, Kotak is up almost 5%. Canfinome, ICICI, Dalma Bharat and Axis Bank are down, and Nestle and First Source Solutions are at a fresh record high in trade today.
Darshan, thank you so much for that. Let's take a broader view on what's going on in the markets. Anita, here's an interesting one. Lots been said about what's going on in emerging markets and how they've been under pressure. But just take a look at what's happened from, if you compare emerging market, MSCI, emerging markets and developed markets. And this is really what, I mean, if you look at it from a year-to-year perspective or even from a quarterly perspective, somewhere around September of 2017, the white line actually spiked up. That's the emerging market index for you. And the blue line is the developed market index. That since then, the emerging markets have continuously outperformed the developed markets. Around February this year, you did see a significant drop in emerging markets thanks to a bunch of factors globally. But even today, you've closed financial year 18, even the first 3 months of 18, where emerging markets have done significantly better than developed markets. Now, Bloomberg did a survey of about 15 banks and brokerages across the world and came up with two interesting findings. Asia Pacific stock continue to be on the top of most investors today, followed by bonds in Latin America. 5 factors that have been taken into consideration. One, rate action by Federal Reserve, rising oil prices, the tariff imposed by the Trump administration, policy considerations from China, and lastly, the slide in the technology stocks that took place in the month of February, which actually led to fall in stocks globally. All those factors, sort of form the backdrop of this survey, and yet Asian stocks continue to be the top favorites of most top investors across the world. Lastly, a bit of trivia: the MSCI Emerging Market Index has always gained about 23 out of 30 years. April has always been positive, an average return of about 2.5%.
All right, so maybe April will go well, but what happens in the rest of the year, at least the rest of the financial year for us, depends on a whole host of factors, global and domestic. We had a chance to speak with Dhananjay Sinha of MK Global, and he shares with us what he thinks is going to be the driving factor behind the markets and why he believes this will be a volatile year.
So I think FY19 will be a sort of a volatile year for the market. I think key thing that is a takeaway from our analysis last year is what happens to domestic flows, especially the mutual funds and retail participation. And we have seen that wherever there is an overweight position of the mutual fund or the retail investors, there has been sharper correction in the stock price and the relevant index. So I think that is something that we'll need to watch through the year. So I think that is one superimposing thing that will be there. The other thing is, of course, what happens to the risk-free rate globally. What is happening? We'll have to see how does that filter into our markets, and that will have a repercussion on the valuations. And I think the third thing that will be relevant is what happens to another global factor, which is protectionism, and how does that pan out, and how does the market take that on, and that is a very important thing going forward. So these three things that will be there. On the fourth side, from a domestic front, I think we believe that it's an election year, so all the election-related sectors, significantly to do with consumption, rural and agri sector will stand to gain. So that's the fourth thing. I think there is a fifth thing, I would say, from a global trade standpoint. There is some cyclical upturn. We'll have to see whether that can stand strong in the context of rising protectionism. So these are the 3-4 things that will be there. So I think a lot of domestic sectors, domestic inward-oriented sectors will actually do well. I think the government will also sort of have favorable policies which are more focused towards domestic plays.
Dhananjay, any view on the auto sales numbers that have come out? Maruti, Tata Motors, Eicher, and now Bajaj Auto. Any view on how the auto sales numbers are panning out?
So I think it has been a strong momentum over the last few quite some time actually, 5-6 months. It has been pretty strong, and that basically, if you look at Maruti, I think the smaller cars have actually done well. So it does look like there is a sort of a certain amount of cash flow improvement in the rural segment, notwithstanding the stress that we are seeing on the agri sector, but it appears that the rural segment is actually doing well. Secondly, I think if you look at the Tata Motors numbers, they have also shown very strong CV sales. So I think that's a positive for Tata Motors. I think we'll have to really look at M&M going, Ashok Leyland, for instance. So Ashok Leyland might actually also surprise if it mimics the positive momentum that we have seen for Tata Motors CV volume growth. And the two-wheeler space also, if you look at Hero Motors, actually done well, better than expected. So I think there is a good amount of consumer-oriented spending that seem to be happening. So that's a pretty strong set of numbers that is coming around there.
All right, that's Dhananjay Sinha talking about the markets, but let's move on now. Biocon wants to increase its focus on biosimilars. The drug maker, which recently got an approval for an insulin drug, which is jointly being developed with Mylan, had set a target of $70 to $100 million over the next 2 years. Here's a slice of the conversation we had earlier today with Kiran Mazumdar-Shaw.
As a company pursuing biosimilars, we are the only company really addressing global opportunities out of India. I think this is an extremely crucial year for us. Last year has been a great year for us because of the trastuzumab approval that we got from the US, and of course we've ended the year with the Semglee approval from Europe. So that has absolutely got us off to a good start. I think this year we expect many more approvals like you've just mentioned. And I think biosimilars is certainly a business strategy that has worked well for us. We do not see aggressive competition for many years yet, because I think it's only now that many companies have started investing in biosimilars, and by the time these programs are developed and brought to the market, we know that it will take a few years yet for many of these companies to really start catching up. So I think from that point of view, we are very pleased that we are amongst the front runners, and that actually gives us an early mover advantage. I think having a partner like Mylan has been extremely good for us, because we are very confident that Mylan is going to look at the commercial opportunity in a way that really focuses on getting maximum market share. So we're looking forward to the next few years as being bonanza years for Biocon. I think we have basically vindicated ourselves in terms of making these big bets and big investments into biosimilars over the last several years. And I think today investors are beginning to feel very positive about the business model and the business strategy that we have adopted.
Kiran, one final quick word before we wrap up the interview on Semglee. Morgan Stanley believes that you could generate $70 to $100 million top line in two years. Is this something that you are working with?
Well, I think that's certainly very doable. I think the opportunity is much larger, but I do believe that that's a very doable target.
Indian gas producers will earn more for every unit they sell, at least for the next 6 months. The government has hiked the administered gas prices for the first half of the new financial year, taking it above the $3 per MMBTU mark for the first time in 18 months. Somit Sarkar here with us to talk about which companies stand to gain. Somit.
So the prices have been set at around $3.06 per MMBTU, that is million British thermal unit, and this is a hike of around 6% compared to the last 6 months. Now, if you see, government had last raised gas prices back in November 2014 when they had introduced this new pricing formula, but since then they have continuously cut the gas prices, making the gas business loss-making for the oil producers. Now, however, this is a second consecutive hike that has come in, and this rate will be applicable from April to September 2018, that is for the first half of financial year 2019. Now, along with this, the government has also hiked the rate for difficult fills or the deep water fills by around 8% to $6.78 per MMBTU. Now, this revision in gas price, along with the government's focus to double the gas output, will bring in some relief for these oil producers and lift their gas business. Now, among these companies, it will benefit the most ONGC and Oil India, because if you see, they produce nearly 80% of the total gas produced in India. Now, 72% of the gas is produced by ONGC, while 9% by Oil India, while the remaining 19% is produced by other private players in the sector.
So how much will some of these gas producers gain?
So if you see, for ONGC, the gas business contributes around 16 to 18% to the top line, while it contributes around 14 to 18% of the EBITDA. And for Oil India, it is 15 to 17% on the revenue front and 14 to 17% on the EBITDA front. So what we have tried to do now is to calculate how much the EPS would have been higher for ONGC and Oil India if this new rate of $3.06 per MMBTU would have been applicable in the corresponding period last year, that is for the first half of financial year 2018. So we are assuming that the sales and production numbers are same. As the production number is same, the cost of production would have also remained unchanged. We are also assuming that the company pays taxes at the same rate, and we are assuming the rupee to dollar conversion at 65. So if the gas would have been sold at $3.06 per MMBTU, then the gas revenue for ONGC would have been close to 6,900 crore and for Oil India at around 881 crore. Now, this would have translated into an incremental profit before tax of close to 1,300 crore for ONGC and 167 crore for Oil India. Now, after paying taxes, the incremental profit after tax, that is the net profit for ONGC, would have been close to 894 crore and for Oil India close to 118 crore, which means the EPS of ONGC would have been higher by 0.7 rupees and for Oil India by 1.56 rupees. This means that EPS would have been higher by around 10% for ONGC and 11% for Oil India if this new rates would have been applicable in the first half of financial year 2018.
All right, Samit, thanks so much for that. The retaliatory tariff of $3 billion imposed by China on various products like wine, pork and nuts comes into effect from today. Bloomberg News' Tom McKenzie gives us the details and the implications in this report.
Well, it's going to be $3 billion worth of tariffs that were announced earlier in March, I should say, and they, as you said, will come into effect today. So they're going to impact things like fruit and nuts and wine as well, and pork from the US, as well as a small amount of metals as well imported into China. But this is obviously a relatively small conservative number, as has been described. Those tariffs are kicking into play today. What we aren't seeing yet are broader tariffs on larger imports, so for example soybeans, although of course they are potentially on the table. We're waiting to hear, of course, from the Trump administration the details of this $50 billion worth of tariffs. He's got until April the 6th to confirm exactly which products those are going to be put on, and then of course China has said it could retaliate with further measures, because these $3 billion worth of tariffs are in retaliation for the metals tariffs that the Trump administration imposed. So we could be looking at further tit for tat, of course, when it comes to these tariffs on both sides. But for the moment, this $3 billion, a relatively small impact. It may change my shopping habits a little bit, but of course, it is the US-China trade tensions that are potentially the key headwind when it comes to China's economic growth picture, as well as the de-risking and deleveraging campaign and the anti-pollution crackdown as well.
Tom McKenzie from Beijing. Sandhar Tech back home listed at a premium of 5% to its issue price. The 500-odd crore initial public offering was subscribed over 6 times on the final day of bidding. Ridhima caught up with the co-chairman and managing director of Sandhar Tech, Jayant Davar, to discuss the company's growth plans and where he plans to deploy the IPO proceeds. Listen.
We have 79 OEMs. We have 40 plants. We will have 40 plants by the end of the year. We have 29 product categories leading up to thousands of components that we manufacture now. Today, 5 of our plants give us about 65% of the, 5 of our clients give us 65% of the revenue. But like I said, there are 79 who are in the pipeline. And each of them to mature, that's the future and process that we're looking at. We are very, very well diversified, not only in terms of product lines, but in terms of geographies, in terms of the automotive sectors, in terms of whether it's 2-wheelers or 3-wheelers or 4-wheelers or tractors or construction equipment or off-highway, what have you. So to us, at this point of time when the economy is doing well, especially in the auto sector, we have all our guns firing, and I see no reason why there should be any kind of a dilution of growth as we go forward.
So you had indicated in your expansion plans that you would be commissioning 5 new plants in India. Help us understand where that process stands right now, and how much of investment would be debt financed versus internal accruals for these expansion plans?
Well, one of the core reasons for us to go for this listing or the public issue was to retire the debt that we had on our books. We had about 500 crores of debt, out of which 250 crores is working capitals, and that also largely for our overseas operations where the cost of funding is much lower. But the term lending, which was about 250 crores, will be wiped out completely. We will work on a clean slate. And we have a caveat within ourselves that for the next few years, our investments will not exceed our level of depreciation. So a large part of the investment has already been plugged into the new plants that we are talking about. At the time of filing of our DRHP, we had 8 plants that were to go under commissioning. 3 of them have already been commissioned and have started operations. 5 are in the pipeline, which should be up and running before the end of the year. That's the plan.
So how much of the investment has already gone in? What will be the capex that will be required?
We have already spent over close to 650, a little over that crores. The incremental one is very, very small. But like I said, I've given you a caveat and a qualification that in the next few years, we don't see that exceeding our level of depreciation, which is at about 60-65 crores a year.
All right, that's the management of Sandhar Technologies. Let's move on now. The application process for the highly sought H-1B visa kickstarts today. The process began amid unprecedented scrutiny by the Trump administration and fears that a large number of applications may get rejected this time around. Shivendra Singh, Vice President, Global Trade Development at NASSCOM, now joins us on the phone line. Mr. Singh, thank you so much indeed for joining us. What is the NASSCOM's view on the tightening of norms by the U.S. administration on H-1B visas?
Well, thank you very much, first of all. I think if I look at it individually, they're not really big, but if you look at it collectively, then we've seen a number of moves in terms of executive orders right from 31st March 2017. We know where computer programmers were not automatically qualified as specialty occupations, and it goes on with the Buy American, Hire American executive order, changes proposed to the labor condition applications, then changes proposed on the H-1B in terms of eligibility, employer-employee relationship, wage levels, and also the H-4 spouse visa. Taken together, all of these means constant changes which are proposed, which is not good for business, and that's where the challenge lies.
Mr. Singh, so what is the thinking within? Have you had conversation within the industry of? Are you planning to lobby hard against this? Because whatever reports we're hearing so far, that there will be very little tolerance even for minor errors in visa processing. Is that a concern?
See, there are a couple of things here. First and foremost, the Indian IT industry is a net creator of jobs in the U.S. and has done, supported more than 100,000 direct jobs, plus is doing a lot of value for the U.S. economy. So they work with more than 75% of the Fortune 500 companies. Number two is the fact that in terms of number of H-1Bs which Indian companies hire, and when I say Indian companies, I'm looking at the top 7 which accumulate for more than 90% of the visas, is less than 10,000. So it's hardly 13% of the visa cap of 65,000. But Indian nationals get 70% of the visas. Which means that they're going to American companies and non-Indian companies, which is a strong testimony to the fact that Indian nationals have these relevant STEM skills so that they are in demand globally. So the question which begs us is that till the time the STEM skills gap is there, these people are going to be required to fill in the gap. Once there is no gap, then obviously this problem will get sorted out. It's not cheap labor, or that a lot of misperception is circled around, because you have various data, including American Department of Labor and other data, which also talk about the fact that H-1B gets equal, if not more, salaries than the local American hires. It's more the STEM skills gap, and I think that needs to be bridged, because one of the biggest challenges that you see is unskilled migration gets clubbed with skilled migration. So whether Brexit has happened because of migration and unskilled migration, whether it was the refugee crisis or many other things, there is a feeling that they take away jobs. Whereas in this case, it's not even migration; it's high-skilled worker mobility for qualified people to go and complete projects and then move to different parts of the world. So that kind of misperception needs to be absolutely cleared and clarified. And it's more a political rhetoric rather than economic rhetoric, and that needs to be clarified.
Which specifically to Indian companies, Mr. Singh, we have seen the Indian IT companies, in a sense, move away from building a model that is reliant too much on H-1B visas over a period of time. Do you see any material impact to Indian companies by virtue of this move?
Well, as you are absolutely correct. So even in 2014, the numbers were relatively smaller than what it was earlier. So that was much before President Trump came into power. So it is not at all linked to anything specific. I think the business model, as you very rightly said, changes. So as you see more of digital disruption and big data, cloud, robotics, artificial intelligence, you will see a change where a lot of companies will have to put resources near shore, onshore, and you will see a lot of local hiring happening as we speak. So it's very much the demand of business, and that's how companies will go by.
Excuse me. Given the overall protectionist rhetoric that you're hearing from the United States, Mr. Singh, are there any conversations going on at the NASSCOM level or at the government level with the United States in terms of relaxing any of these visa norms?
Well, conversations at a government-to-government level continues to happen. As far as we are concerned as NASSCOM, we continue to brief the government on any issue, any concern, any challenge, any good news. And they have been extremely supportive to the issue of the IT industry because it's about a $126 billion export market, with 60% being the U.S. market. So and we continue to talk directly as well to the administration as well as the legislative side in the U.S. and other stakeholders, highlighting the value which the Indian industry is bringing. So if Infosys announced 10,000 jobs between Indiana and North Carolina, if Wipro has announced 3,000 jobs, if Cognizant is spending money on STEM skills, if TCS does Carnegie Mellon, 35 million grant to Carnegie Mellon, these are important contributions which are important for the U.S. economy. And it's important that a level playing field is provided to our member companies to operate and add value to the economy. And that is what we look for, that there are no discriminatory measures, but all companies are impacted alike in case of any decision which is taken either administratively or legislatively.
We'll leave it there, Mr. Singh. Thank you so much indeed for joining us with your views. That's Shivendra Singh from NASSCOM talking about what this is likely to have, the impact this is likely to have on Indian IT companies.
All right, that's all the time we have on Power Lunch. Thanks so much for watching. We've got Countdown coming up next.